Hello, everyone, and welcome back for another edition of the Money Pros. I'm Oliver Tutt, certified financial planner practitioner. Your host for the next half hour as we talk about the issues related to your money, how to make it, how to keep it, and hopefully how to help it grow. Last year in a show on life insurance, we talked about why it's often the foundation of a solid financial plan. On today's show, we're going to dig deeper. The purchase of life insurance involves a lot of choices. We'll talk about those choices and help you navigate the waters of making these important financial decisions. Here to help us will be our estate planning pro, Lynn Riley, attorney and partner with Cameron & Middleman. But up first, I want to welcome back our insurance pro, Jason Lea, executive vice president with Broker Service Marketing Group. Jason, welcome back to the show.
Thanks, Oliver.
All right, we got to get right into this. We don't want people turning off their TVs because we're doing a show on life insurance, but this is an important topic. And I guess the first choice that people face when we're talking about life insurance is, should I buy it or not? Obviously, we believe you should buy it. Make the case for why people should seriously consider this as part of their financial plan.
Yeah, I mean, you're right. Most people think of life insurance and they're not too excited about it. But the bottom line is that our country is really at an epidemic level. Life insurance is all about protection and liquidity. Only 44% of American households have an individual life insurance policy, and half of those folks believe they don't have enough, which means that 78% of the country is either totally uninsured with life insurance or underinsured. And it's an important topic. It builds the protection for your family if something happens to you. The best way I can answer your question is, imagine if you passed away yesterday. Ask yourself the question, would your family be in a financially sound position today? How would they be doing if you weren't around to produce income? That's the question everyone needs to ask themselves.
It makes an important point. It's a purchase that, unlike a lot of purchases that you make for yourself, this is a purchase for other people in a lot of ways, right?
Absolutely. It's for your beneficiaries and your family. It's not for you.
So let's say we get over that hurdle. We realize that we need to buy it. Next question is, how much do we need to buy? A lot of different ways to go about calculating sort of what's the amount I need for life insurance. But you have a suggested way. I think we have a slide that's going to help illustrate that. But can you kind of walk us through the idea?
Yeah, on the slide here, this is your most basic equation here. In other words, replacing the income that you would have earned if you're gone. So basically, you're multiplying your income times the number of years of work that you had remaining in your supposed career.
Because the life insurance is intended to replace income that you're not going to be there to earn.
Yeah, this is the most basic use of life insurance, to replace your income. So you take your income, you multiply it by the number of years of work, add any debts or other obligations, future college expenses, income,
mortgages you want to pay off.
Absolutely, all your debts and other obligations, and then you subtract out any savings and investments. And for families in their, getting started in their 30s, $1 million, $1.5 million, it's easy to get to that level. Most people think that's a ton of insurance. It actually costs about as much as cable.
When you think about a younger income earner and a lifetime of potential income, even for somebody that's earning a middle income.
Correct.
Now, next big choice, and this is a hot topic, at least in our universe. You get a lot of different ideas from a lot of different pundits, but once you figure it out, you're going to buy it, you figured out roughly how much you need. Next big fork in the road is going to be deciding what kind of insurance, and the major choices are going to be either cash value life insurance or term insurance. Can you real briefly just first explain what the difference between cash value insurance and term insurance is?
Sure, and just to echo what you were saying, it really depends on the purpose, right? We talked about income replacement a minute ago. You might want to go with the least expensive option there and get your income replaced for 20 or 30 years. If you're dealing with estate taxes or you're dealing with a business that you need to insure, you might have different needs. But the two basic types here are term insurance and permanent insurance. And
what I call cash value.
Or what you call cash value life insurance. And the bottom line is, term insurance is kind of like renting the coverage for a temporary period. Permanent insurance is kind of like owning the coverage for the rest of your life. So you're going to get value back no matter what. It's going to last as long as you live, and you can access benefits while you're alive on a tax-free basis, and obviously the death benefit is there for as long as you live. So basically, renting, less expensive; owning, costs more, but you're going to get benefits back because it lasts your entire lifetime.
So how does one go about deciding which one is right? Is it a combination? Is it one or the other? What are the deciding factors when you're choosing between the two?
It really is important to talk to a financial professional about this. It is not something you want to just take the lowest price, not consider choices. You definitely want to do your own homework online. That's not a bad thing, but you definitely also want to talk to a professional. Each client's needs are different, but if you had to pick, one, what you don't want to do is do nothing, right? So if you had to pick one, you could go with term insurance to get started and build off of that later on.
So you could do a combination of
Absolutely.
it too. You also talked about the fact that it depends on what the need is. If it's a temporary or a period need of replacing income, term insurance may be a more important consideration. But the permanent, if you have estate planning questions, or you want to make sure that that benefit is there for the rest of your life. Because correct me if I'm wrong, term insurance will become prohibitively expensive for people later in life. Once they get into, say, 50s, 60s, and beyond, it becomes an extraordinarily expensive proposition versus cash value that you've been paying for all your life. Right?
Yeah, exactly right. The older you are, if you have a 20-year term, you're getting out towards life expectancy. You might want to consider a permanent policy.
All right, Jason, a lot of valuable information. If you'd like more information on the choices you face when deciding on life insurance, please visit our website at foxprovidence.com/themoneypros, where you can also see a replay of this segment. When we come back, we'll be joined by our estate planning pro, Lynn Riley, attorney and partner with Cameron & Middleman. So stay with us. We'll be right back right after this.